Buying I-bonds for minors. Can you do it? How do you do it? And should you do it? Hi guys, it's Jennifer from Diamond NestEgg. So, can you buy I-bonds for your child? The answer is yes, you can. We just bought $10,000 for each of our 4 kids a few weeks back. And by the end of this video, you'll know how to do this too, step by step via the Treasury Direct website. I'll walk you through everything. Now, yes, you can buy I-bonds for your kids, but should you? Just because you can doesn't mean you should, right? There are legal, tax, and financial considerations you need to take into account before diving headfirst into I-bonds for a child. For example, can you transfer the I-bonds you buy for your child back to yourself? Can you cash out your minor's I-bonds? And if yes, what can and can't you do with this money? What are the tax implications for your child and for you? Are I-bonds for education better than a 529 plan? If you're interested in the should you do it part first, before the how to do it, then check out the timestamps below. Many folks are loading up on I-bonds right now, like we've been doing, with the excess cash in our personal portfolio. We've actually built up quite the I-bond portfolio over the past few weeks, and after a lot of due diligence, even discovered a legal loophole that allows folks to buy more than the annual $15,000 limit per person via Treasury Direct and their tax refund. I've linked this legal loophole video in the description below in case you're interested in checking it out later. Why the sudden interest in I-bonds? It's because they offer safety and a high yield during these times of high uncertainty and inflation. Safety first. It doesn't get much safer than I-bonds. I-bonds are 30-year term U.S. savings bonds, so pretty much risk-free. The U.S. government will not default on your I-bond or refuse to pay back your money when you redeem it, so long as you meet the minimum holding period of 1 year. Second, the 7.12% yield. 7.12% is the annualized yield on all I-bonds purchased through April 2022. The I in I-bonds stands for inflation indexed. I-bonds are adjusted for inflation every 6 months in May and November of every year, so perfect for these times. And what this means for you is that if you buy an I-bond for your kid in April 2022, at the time of this taping, that I-bond would get the current 7.12% annualized yield for 6 months. So 3.56% in total from April to September. And from October to next March, that I-bond for your kid would get whatever the May I-bond reset rate is. For more I-bond details, restrictions, and limitations, be sure to check out this I-bond 101 video here. I've included the link to this video below as well because it walks you through how to set up a Treasury Direct account for yourself. And you'll need to do this before you can set up an account for your child and buy them their first I-bond. So let's assume that you already have a Treasury Direct account. Here's what you need to do next if you're interested in purchasing I-bonds for your children. First, go to the Treasury Direct website and click on Login. On the next page, click on Login again. Enter your account number here and click Submit. On the following page, enter your password via this virtual keyboard. It's not case sensitive. Then click Submit. This will bring you to the main summary page of your Treasury Direct account. Click on Manage Direct. On the next screen, click on Establish a Minor Linked Account. This screen may appear next. It doesn't always, but if it does, just answer the security question you chose when you set up your Treasury Direct account. On the following page, enter your child's name, social security number, and date of birth. You should also give the account a name. Next, you'll need to enter your child's address. I'm just going to click on Use My Primary Account since our children live with us. Scroll down and enter your contact phone number and email. Then double check that your bank information is correct. This is the primary bank account that you set up in your own Treasury Direct account. If you want to change this information, just follow the directions in orange here, right below where your information is. Now read through this box to confirm that your child's social security number is correct, that your child is not subject to backup withholding, and that your child is a minor. If everything is good to go, click Submit. This confirmation page will now come up on the screen. Make sure all the information is correct. Now scroll down and click Submit if everything is good to go. Otherwise, click on Edit and go back to make the changes you need to make. The account info page that appears afterwards serves as confirmation that the account for your child is now open. Double check once again. Make sure that it is correct. If anything is wrong, scroll down and click Edit. If nothing's wrong, you're set to buy your first IBAN for your child. To do this, go back up to the top of the page and click on Manage Direct. On the following page, click on Access My Linked Accounts. What you'll see next is a list of the minor linked accounts you've set up for each of your children. You'll see that here it says minor. Select the child that you want to buy IBANs for and hit Select. The next page shows your selected child's account summary. You'll know that it's your child's account because you'll see both your name and account number and your child's name and account number up here. Plus, your child's name will also be here. You can buy an IBAN for your child now, just like you would in your own account. Click on Buy Direct up at the top. On the next screen, select IBANs, the series I here, and then scroll down and click Submit. Here's the purchase page that pops up now. Make sure that you select your child's name from this drop-down box. Enter your purchase amount, the bank account that the money will be withdrawn from, and the date you want to buy the IBAN on. We chose to do it as a one-time purchase, but you can schedule weekly, bi-weekly, or monthly purchases, or some other rhythm that works best for you. Or you can even set this to specific purchase dates. Once you've sorted out your purchase date or dates, click Submit. This will take you to a purchase review page that looks like this one. As always, confirm that everything is correct and click Submit. If there are any errors, click Edit to go back and make your changes. And if you think your child doesn't deserve an IBAN, click Cancel. I'm just kidding, trying to make the tutorial a bit more interesting. We're almost done. Once you click Submit, you'll get a confirmation screen like this one. I always suggest printing stuff like this out for your records because I'm old school. You'll get an email confirmation as well though. But this email confirmation, there really isn't much information on there. But there you go. You've purchased your first IBAN for your child. Now, let's fast forward a few years and pretend that your child is 18. It's now time to transfer your child's IBANs from their minor linked account, which you've held all this time under your own Treasury Direct account, to your child's own Treasury Direct account, which they will set up now as an adult. Have your child set up their Treasury Direct account first, and then give you their account number because you'll need it later. To start the transfer, go back to your account summary page here and click on Manage Direct. On the following page, select D-Link a linked account. This D-Link an account page will appear next. Here, you'll see a list of all your children for whom you've bought IBANs. Select the adult child whose account you want to D-Link, then click Submit. This screen will now appear. Enter your adult child's Treasury Direct number here and click Submit. Now, this was as far as I got since my children aren't 18 and therefore can't have their own Treasury Direct account yet. But based on our experience buying so many IBANs this year, what will most likely come up is a page for you to review your delinking request and then a confirmation page. According to the Treasury Direct website, once you submit this request to delink your adult child's account, everything will be moved over to your adult child. Delinking is simply a transfer of assets that already belong to your adult child. But you will need to provide your adult child with any relevant tax forms related to their IBANs. It is not a taxable event for either of you at the point of delinking. It becomes a taxable event only for your adult child when they cash out their IBANs. More on taxes later. Here are the 4 legal, tax, and financial factors you need to consider before deciding whether or not buying IBANs for your child or children is the right decision for you and your family. 1. Can you transfer the IBANs you buy for your child back to yourself? And the answer is no. You can't transfer the IBANs you buy for a child back to yourself or cash them out for your own spending or investing purposes. It is illegal to borrow your child's name and social security number under the guise of buying an IBAN for him or her as a gift and then transfer the IBAN or take the money back for yourself later. The IBAN is in your child's name. It's a gift to your child, and it belongs to your child. The applicable rules in the Electronic Code of Federal Regulations on IBANs state clearly that the gift bond will be registered in the name of the recipient. The registration is irrevocable with regard to the owner named on the gift bond. 2. Can you cash out your minor's IBANs? And if yes, what can and can't you do with this money? So yes, you can cash out your child's IBANs before he or she turns 18. You are the custodian on your child's minor-linked account, so long as he or she is under age 18. That's why your child's minor-linked account sits within your Treasury Direct account until your child is 18 and you delink it. And according to the Treasury Direct website, as custodian of your child's minor-linked account, you can purchase, redeem, receive gift deliveries, and perform other transactions within the account on behalf of the minor. This on the behalf of the minor, do not forget this point. So yes, if your child has not turned 18 yet, you can redeem or cash out your minor's IBANs once the minimum holding period of a year has been met. And if you do this within the first 5 years of purchase, again, assuming your child is still under age 18 at that point, remember that you will forfeit the last 3 months' interest as an early withdrawal penalty. Having said all that, keep in mind what I detailed earlier. You can't transfer the IBANs you buy for a child back to yourself or cash it out for your own spending or investing purposes. So if you and the wife or you and the hubby want to cash out your child's IBANs for a fancy couple's vacation to Europe, that's a no. But you can cash out your child's IBANs and transfer the proceeds over to, say, a youth account at Fidelity. And again, in this case, as with the minor-linked account at Treasury Direct, the youth account at Fidelity is in your child's name, but you are the custodian. This means that you, as the custodian, until your child turns of legal age, you can decide how to invest your child's money in that account, whether that's in bonds, index funds, ETFs, or maybe even individual stocks. Here's another example. A first car for your kid is most likely okay. It's for the benefit of your child. But a car for you and your partner because you guys need or want a second car, definitely not okay. Always remember that the money is your child's and can only be used for his or her benefit. When your child turns 18 though, and you delink his or her minor-linked account from yours and transfer over your child's IBANs to him or her, you can't do anything more with these IBANs. At that point, your over age 18 child has full control of what to do with those IBANs, given that he or she is now an adult. And if you decide not to delink your child's minor-linked account, and not to transfer over his or her I-bonds at the age of 18, say because you think your child is a financially irresponsible adult and will blow all that cash on something stupid, you still can't do much within the minor linked account. According to Treasury Direct, if you choose to maintain the minor account once the minor reaches 18, you're restricted from performing nearly all transactions. However, you can still purchase securities on the child's behalf, which you wouldn't do, of course, if you thought your 18-year-old would just squander everything away. 3. What are the tax implications for your child and for you? Remember, I-bonds are not subject to local and state taxes, but they are subject to federal taxes. So tax implications for your child first. Say that you decide to cash out your child's I-bonds, perhaps because you want to invest the proceeds into the stock market on his or her behalf, as I mentioned earlier. Or perhaps you cash out your child's I-bonds for some other benefit of your child. Well, whatever interest earned on the I-bonds held in your child's name is taxable to your child on a federal level. For 2022, the first $1,150 of a child's unearned income, in this case, the I-bonds interest payments, qualifies for the standard deduction. The next $1,150 is taxed at the child's income tax rate, which starts at 10% if your child has no other income. Any interest income above $2,300 is taxed at the parent's marginal income tax rate, so your marginal income tax rate. In a nutshell, the tax benefit of buying I-bonds for your child is for all practical purposes limited to the first $2,300 in interest income in 2022. Plus, you would have to file a tax return on behalf of your child to take advantage of the tax savings. Now, tax implications for you. Buying I-bonds for a child is considered a gift, and the annual gift tax exclusion amount in 2022 is $16,000 per donor per recipient. So, if you're just buying $10,000 in I-bonds for your child, you should be fine. If, however, say you decide to buy $10,000 of I-bonds for your child and put $10,000 into his or her 529 college savings plan. So in total, you're gifting your kid $20,000 this year. This would put you over the $16,000 annual gift tax exclusion limit. So you'd have to file a gift tax return on IRS Form 709. Do keep in mind that if there are two parents involved in the gifting process, that annual gift tax exclusion number per child goes up to $32,000 because the annual gift exclusion number of $16,000 is per donor per recipient. 2 parents equals 2 donors equals twice the amount. If you have further questions on this, be sure to consult with your tax advisor or tax preparation service, as there are a lot of I's to dot and T's to cross on this one. 4. Are I-bonds for education better than a 529 plan? If the idea is for your child to pay for college expenses with the I-bonds you buy for them in their name, you're probably better off with a 529 plan, especially if your child is still young. There are a few reasons for this. First, there's significantly more tax benefits with a 529 plan. Earnings withdrawn from a 529 plan that are used to pay for qualified educational expenses are tax-free, whereas the earnings from I-bonds that are in your child's name, we already talked about this earlier, it's going to be taxed above a certain level, regardless of what your child uses it for, college, car, or a cat. Now, if the I-bonds were held in your name, the parent's name, and you use the earnings from your I-bonds to pay for qualified educational expenses for your dependent child, your spouse, or even yourself, then you may not have to pay federal income taxes in some instances. But as always, there are a lot of restrictions on this one as well, as you can see from this list of qualifying conditions here from the Treasury Direct site. Plus, there's an income limit which disqualifies most higher earning families from taking this federal tax exemption. You basically don't qualify for this federal tax exemption in 2021 if your modified adjusted gross income, your MAGI, was equal to or more than $98,200 if you're single, head of household, or a qualifying widow or widower, and $154,800 if you're married filing jointly. In addition, in some states, you're able to get a tax deduction or credit when you contribute to a 529 plan. In New York, for example, when you contribute to the New York 529 Direct plan, if you're a New York State taxpayer and an account owner, you're able to deduct up to $5,000 of those contributions if you're a single filer, and $10,000 if you're married filing your taxes jointly. Second, money in a 529 plan is treated more advantageously in financial aid calculations. For this purpose, a 529 plan is considered a parental asset, even if the beneficiary is the child, meaning only 5.64% of a 529 plan's account balance will be counted towards the financial aid calculation. I-bonds held in your child's name, on the other hand, are considered your child's personal assets. And for financial aid purposes, this means 20% of your child's I-bond account balance will be used towards the financial aid calculation. Third, you have much more flexibility with a 529 plan as a parent. You control what happens to that money, regardless of who you name as the beneficiary. Remember, I-bonds purchased for your child in his or her name, that's not your money, it's theirs. So for example, say you buy $10,000 of I-bonds for each of your 2 children, their names. Each child now has $10,000 of I-bonds, and when the time comes, they can do whatever they want with their $10,000. You can't take it back. You can't tell them what to do with it. I mean, you could try, but we all know how well that works out. Now, if you were to put the same $10,000 into 2 529 plans, again, one for each of your children, they're the beneficiaries, but you're the account owner, and you own this $20,000. If one of your children decides not to go to college, or if you decide you like one more than the other, which you shouldn't, of course, but in theory, if that were the case, you could change the beneficiaries so that all $20,000 goes to one child. Or if you decide to go back to school yourself in retirement, you could even change the beneficiaries on the 529 plans to yourself. Fourth, if your child is young, stocks invested in the S&P 500 will typically have better returns than I-bonds. I always tell clients, I-bonds are designed to keep pace with inflation. They are not designed to make you rich. That's what the stock market is for, if you have the right long-term mindset towards investing. No matter which decade you started investing, your average annual rate of return from the S&P 500 beat out the average annual rate of inflation every time, meaning the S&P 500 beat out the returns you would have gotten on an inflation index government bond, like an I-bond, every time. So while we have bought some I-bonds for our kids, we're still contributing to their 529 plans as well for educational purposes, precisely because of all these benefits I've just listed out for you. Now, if you haven't bought any I-bonds for yourself yet, or if you're trying to figure out how to buy more than the $15,000 annual limit via Treasury Direct and your tax refund, then check out our I-bond playlist here. It walks through the legal loophole I discovered a few weeks back that may help you, like it helped us, buy more I-bonds, step by step, and it includes more I-bond details, restrictions, and limitations. Or take a look at our other inflation videos here if you're looking for top money tips on inflation-proofing your finances beyond I-bonds during these uncertain times. So I hope you enjoyed this video. If you did, don't forget to hit that thumbs up and drop me a note if you're interested in working together and reaching your financial goals quicker than you would be able to do on your own. See you next week with another money-saving, wealth-building video.